All right, Mary Ann, you want to call the roll, please?
Here.
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 Yes.
Yes.
Yes. All right, our first item is discussion information, and we're having George Chirempes, the CFO of the Township Treasurer's Office. George, you want to step up here? And
Tim McGinnis, do you want to do a formal introduction and what we want to handle tonight?
Yeah, we're part of the Proviso Township Treasurer's Office. George is going to talk a little bit about some of the duties that they handle for us, including payroll, accounts payable, the financials, and investments. We're one of 14 school districts that use the Proviso Township Treasurer's Office. And George is the CFO there and has a staff of 5 or 6 other people that work there and complete all of the reporting and that for all the other districts. So with that, I'll let George tell you a little bit more.
Okay, I did distribute 2 handouts this evening.
Yep.
The first one, I'd just like to go over just a little brief overview of the office. Okay, that's the first handout. And I always like to start out with the mission statement of the office. What the mission is, and it says quite clearly, the mission of the Proviso Township Treasurer's Office is to provide efficient, consolidated financial services which reduce operating costs and maximize interest earnings through pooled fund investing. The Township Treasurer's Office statute has been on the books since 1819. So it's been a form of quasi-government for quite a long time. Right now in Cook County, there are 12 of them. There are 12 towns. It's unique to Cook County. You won't find it in other parts of the state. Right now, it's basically approximately 100 school districts and 7 special co-ops that's managed by it. On the second page, I just wanted to give you a little bit of an office structure. There is a trustee overview. We have 3 elected officials. Just as you, they're elected by the people of the district. They serve a 6-year term, okay? They meet quarterly. You meet monthly, they meet quarterly. They review investments and adopt policy. Their main responsibilities, 1 through 6, I won't kind of bore you and go through them, but hiring, reviewing statements, reviewing bills, approving banks and dealers, hold property, and render decisions on boundary changes. I listed the 3 current trustees that we have, with Anthony Travis as the president, Patricia Conley is one of the trustees, and also Mark Walsh. Beneath that, I listed the treasurer's office staff. This is the entire staff. There are no part-timers. These are the people who do all the work. Dan Colonese is the treasurer. I'm the CFO. Vicki Lyson is the director of operation. And we have 4 other individuals at different duties, payroll or administrative assistant. There are no part-timers. If you go to the next page, I just gave you a list of the 14 entities which we interact with, starting with District 87 all the way through District 803. And you can see 2 high schools, Riverside, Brookfield, and Proviso High School, both east and west. The rest of them are basic elementary schools. Services, I gave you just some highlights here. Processing payroll and accounts payable checks, providing financial and personnel software, reconciling bank accounts, handle all the banking relationships, provide financial information to auditors and state agencies, filing federal and state tax forms, W-2s, 1099s, prepare monthly cash positions, which we send to everybody, we close every month. We do all the investing, the pooling of investment of the funds, and we also serve as a consultant. We get many questions on tax levies, bill payments, how to correct things that go inaccurately into the system. We also assist on all your bond closings. We work very closely with your underwriters. We basically give them a lot of financial information to supplement your audit. They ask a lot on property taxes, distributions, prior years, refunds, TIFs. We pull all that data for them. We work very closely with them. We also coordinate a whole training session for our DCR software. Anytime there's enhancement or there's a new procedure, Like EIS, I think, is a new one right now, coming out with a lot of information, both on salary and all your employees. DCR software had to be changed. We're holding seminars with all the users and say, this is how you get it into the system. We've added the extra codes for you in fields. Fill this in and you can lift the report right off the DCR system. We coordinate that. So we interact. We're the intermediary between the DCR software and your district. And then just to kind of, I'm kind of highlighting the services major, but I just attach to the payroll. So when I say process payroll and accounts payable checks, if you look at the last page, there's 9 steps to that. So I'm not trying to minimize, I just tried to give you a quick highlight. But behind each one of these major categories, there's 9 or 10 actual duties that are being done by the staff. So I'm just giving you a quick overview of it. That's just kind of a quick overview of the office, the staffing, and a little bit what we do. If there's any questions on that, I'd be glad to entertain it right now before I talk a little bit about cash and investments.
George, is there any future possibility of going to a different system besides DCR, or is that just something that? I know all the township office are using DCR. If I'm not
Well,
mistaken.
no, some of them have migrated to a different software last year, okay? But I will tell you, in conversation with the other treasurers, it's been very costly. Their maintenance fees have went up significantly. Yes, it does have some more whistles and bells, just like anything in technology. When you move up to the next generation, you're always going to get, maybe reports quicker or something you can do from a mobile and an app or something. But technology cost. And when we talked about it a little bit, we looked at it, and in this environment, with these school districts that we are, if you start looking at these fund balances across the board, to go in right now and start buying technology and moving up this fixed cost, better give it some very serious consideration. And that's the reason why. Now, will you migrate sometime in the future? Yes. I'm sure there'll be a migration. But in the last 2-3 years, with everything that's been going on with the tax cap and what's been going on with the economy and state funding, many of the districts said, you know what, we don't want to add to our fixed cost right now. DCR has been around for a long time. It's a very good system. It handles the basics very well. It really does. Your payroll, your accounts payable, it handles it. So maybe until we get a little bit better on, maybe these fund balances get a little bigger so people can start affording it, it probably would be something that the district should entertain at some point.
Thank you.
Sure.
Can the software export the reports though in an Excel or a data-only file?
It can export it in Excel, yeah. There's a software piece of it called Relativity.
Okay.
Relativity is really an advanced kind of an Excel sheet where you can go in and manipulate the data and upload it right into an Excel file or print it right out in almost any manner that you want. It's really a very flexible tool. And we do hold seminars at the office. We had one last year. And we told people that, this might be something you really might want to send some of your staff to, because you are able then to go in and really pick and choose the data out of the DCR system and put it in the format that you wish.
See, that's our major complaint. Alls we've wanted it was in an Excel, not this PDF form. So,
Yeah.
I mean, it's not that we needed new software, but just so
Yeah.
that we could,
Well,
rotate it and look
Yeah.
at it.
Well, but I think rather than going right into the Excel form, if you look at the Relativity software that's within DCR, it is an Excel spreadsheet because you can lay out the columns, you can pull the data that you want, put it in each column, and it'll bring it right over for you.
We get PDFs, so, as board members.
Mr. McGinnis, that was, our staff is trained on relativity, right?
Yes.
Okay. Good.
So George, so you're the township, Proviso Township, the financial side. Who do you report into
I
besides?
report to the treasurer.
But I mean, is there a monitoring service over Provisos? Make sure financials are being done right,
Well, I mean, Matt, we get, I was going to go when we talk about cash and investments, because we get audited every year by the same audit firm that you people have, Evans, Marshall, and Pete. So when you say that, is there somebody monitoring us? Yes, we have an independent third party.
And do you report into any state function at all, or any state?
No, we don't. We report to our trustees.
Okay.
We don't really report into the state, to the IBHE. No. There's no IBHE or ISB. No, we don't report directly to them.
Okay. Any other questions before?
I have 5 different areas, so I'll go 1 or 2 and then someone else can jump in.
Okay.
Each year, we're getting pooled services from the township. We also pay a fee for those services. And it's my understanding that that fee is based more on account balance of money,
Revenues.
revenue. So can you explain?
I was going to get into that on here.
Okay,
When we go into page 2 here on this, you'll see exactly how that's prorated.
okay. And then when we get to there, I'll ask the question
Okay.
as to, is that a fair method?
Okay?
Okay. How satisfied are you with the auditing firm?
Evans, Marshall, and Pete, we're satisfied with. They have a great deal of experience in governmental accounting. And I think when you're going ahead and hiring an auditing firm, I think that experience in the governmental accounting area is very important. And they've been doing it a long time. We've had absolutely no problems with them.
Okay, and then that document you held up, how often do you or your coworkers reference that after it's done? And for what purpose?
We, since we do most of the numbers that are in there, as far as referencing it, we do get requests from a lot of the underwriters, sometimes request this report from us.
So you photocopy it and pass it along?
Yes, yeah. We have it in a file, we send it in our office, through email.
Okay. And then, I don't know if you're gonna get into this later, you're controlling our money, and you're seeing what we write our bills for, you're seeing what we're paying our payroll for. What happens, or what do you do in the area of if you see something in the fraud nature, or if you see indications of impropriety or something like that? What is the responsibility of the person who's controlling our money and paying vendors that we say to pay? What responsibility does the township have for being a partner and making sure that taxpayer funds are not being pilfered in any way?
Right. Unfortunately, you have all the source documents here at this school. So when you're sending over your bills for payment, we're processing them, but I am seeing no source documents. So without seeing source documents, I think it would be kind of difficult to see if something was being fraudulent or being pilfered. When your bills are coming through, if we're seeing some number, like for payroll, when we run payroll, all the payroll processing before it's coming in our office is inputted here. So I'm assuming that the internal control here has been reviewing the data before it's going into the system.
Okay.
Okay. Now, let's say when we run our bills, all of a sudden we see something that, here's somebody getting paid an exorbitant amount of money.
That was gonna be my example.
Okay. We would look at it and say, you know what? Let's give Tim a call on this.
Okay.
This is quite a large number. This is out of the norm. We would do that. We would, so in other words, can we eyeball it as a third party? Yes, we could. But as you know, in any system, if the internal control here, where the source documents are kept, is not good, it's going to be difficult to catch it further down the line, and it might be too late.
Okay. And with that, I'll pass to the next member.
Okay.
Any other questions before George talks about it?
2 questions.
Okay.
This system of having the 12 township treasurers,
Mm-hmm.
we just are, is it like mapped, so you're the one we use?
Yes.
Okay.
That's correct.
And then, I probably should know this since I lived for a while, but since we don't live in Proviso Township, for most of, I don't know if anybody, I suppose some people in the western of our district do, but we still, because you're our treasurer, our voters get to elect this, 3 trustees for
That is
this
correct.
because we use you, right?
That is correct.
Okay. Thank you.
Couple questions.
Sure.
You provided us a couple footnotes in here.
I want
Right.
could you hold that until I get to that so I can maybe walk you through it?
Okay, because wouldn't there be a footnote that identified the cash that's associated with each of the districts?
That would be a different part of the audit.
Okay. And then,
Go ahead, I'm sorry.
secondly, with regards to the fee,
Okay.
I can understand a fee for the educational side where you're issuing a check for $1,000 on a very high transactional basis. But when a district goes and does a debt issuance, and they're basically making 4 payments a year, and are we getting charged the same amount of fee on that? So
The debt that you're talking about is not used as part of the expense allocation revenues.
Right, but
That
aren't
is
there
not
revenues, didn't we get a levy to fund the debt?
That's not, but that's going into the debt service fund. That's not
So
considered
there's no
revenue.
fee on that?
No, we don't pick that up.
I thought we had a big increase in our,
You had a big increase in your allocation this year.
Why?
Now, let me just mention, I'll jump ahead here.
Why don't you go to that, we have a tendency of jumping ahead.
Yeah, I know, so it's in here, but I'll bring it up, okay. The
don't-
expenses for the district are allocated on a weighted average of the total revenues for the districts in total, okay? That's how it's allocated. For instance, let's say the expenses for the township is 600,000. It isn't 600,000 divided by 14 districts. It's the weighted average of the revenue of each district to the total.
Okay.
That percentage.
Yeah.
That is applied to the total expense.
but our revenues have been going down.
What's the definition of
No,
revenue?
wait. Let me just mention.
Okay, go ahead.
Let me put
You-
another
you
piece of
did-
color on it.
Pardon me?
We budgeted for 56,000 for the current fiscal year just ended.
Mhm.
We paid 85,000. We were just a little over 50% higher than what our CFO thought we should be paying you. So that's the impetus. So if you can put the color on,
Sure.
why was our fee 50% higher?
All right, that's a great question. I'm going to tell you exactly why it happened. When you, and I'm referring back to the 2012 audit.
Okay.
When the 2012 audit was done, the taxes that were received in the 60-day period at the expiration of your fiscal year was picked up as current year revenue
For the prior.
prior.
Okay.
Now, if you recall, those tax bills, it was the first time in 35 years that the second installment was due August 1st. You hadn't had that in 35 years prior. What ended up happening is, he recorded the revenues for July and August and backed them into fiscal year 12, because you're on an accrual basis. Some of our districts are not on the accrual basis, they are on the cash basis. Revenue is the item that we allocate on a weighted average for the expenses. So unfortunately, when we went ahead and allocate the revenues, you guys picked up like $8 million more, because if I remember right, you were forecasting a deficit, and your education fund actually went to an $8.5 million plus. You had a $9 million swing. The reason why you had the swing is you recorded taxes. Okay? You recorded an extra 60 days worth of taxes that in prior years you never did, because the bills weren't due. Now, unfortunately, some districts, some auditors looked at it and said, I think this might be a one-year anomaly. I'm not recording it. I want to see another year. I want to see a trend. It's not that unusual. Well, most times 1 year doesn't equal a trend.
Yeah, but auditing on an accrual basis is
Well,
based
but not all
on
dis-
actual,
but
not
all
on
di-
trends.
But not all districts are on an accrual basis. Some of them
Right.
are on cash.
Right.
So we have some on cash, some on accrual. And then the people that were on accrual, such as yourself, this was an unusual period, and you picked up an extra 60 days worth of taxes, which boosted your revenue up considerably versus the other districts who didn't pick up the 60 days revenue. You see what I'm saying?
I see
So,
what you're saying.
so for the people on accrual versus cash, the cash is always gonna have that lag in paying until they decide to go to, so they have the advantage of cash flow.
Yeah, they do. Now,
So
I would assume-
should not the township change the way they're allocating their
No, I
fee
think,
to
I think
be?
the allocation is good, based on the revenue. I think that's a good methodology. What I'm hoping is this year, everybody else goes to the same type of accrual method that you guys did, and then everything will be back to where it was.
Well, they have to choose it and file with the state.
Well, they
It's
really should
unlikely
choose
they're
it.
gonna
Their
change in
auditors
a
should
year.
choose it.
But
The way this high school booked it, if you looked at it, the pure accounting method, it was the correct way to do it. There's no doubt about it. On accrual method, under generally accepted accounting principles, you pick that up. That is correct. It's just that some school districts are on a cash basis, which they are allowed. They don't need to. Now, unfortunately, I can't sit here and say who's on cash and who's on full accrual. By the time I get the information, I've got to start going through all the audits, and sometimes it tells me and sometimes it doesn't. And I can't go back and start restating people's statements. I can only go by the audit that's presented to me.
Well, what's your fiscal year for budgeting, for your?
July 1st through June 30th.
Okay, so if we're looking at 2013, that accrual brought the revenues to the prior fiscal year,
Mm-hmm.
not to this one. So it should have raised our last year somehow and lowered our this year somehow.
2012. That's the one. That's the year I'm talking about that you're looking at the bill.
No, I'm looking at what we paid for the current fiscal year, for 2013. We budgeted 56.
Yeah, but it was based on those revenues.
You paid in cash based on the prior year's closed books of revenue.
I don't have your 2013 audit yet. How could I book the revenues? You're just
So if
ended
we-
June 30th.
But if we allocated them to the prior year, you're looking at them on a cash basis, and not on an accrual basis.
No, I'm looking at it on an
Then
accrual
if they
basis.
would have been allocated the prior year, they would have
It went to
lowered.
12. That's the audit I'm looking at.
Is the bill lag
He's
to the
looking at-
next year?
Yeah,
I think
the
you're
bill
ma-
lags. The
So
bill
the
we
bill
just,
lags.
2012 bill lagged, we paid in that 2013.
Yes.
Theoretically, if everybody stays on a cash or accrual, which probably they have to, because they have to file with the state to change it, our bill should be lower for this year
This-
relative.
this
It
year
should
should
work
even
out in
out.
the 2
Your
years.
your
right,
weighted
right.
average should go down.
Okay.
right.
Yes.
So do you allocate that fee based on a break even, or are you carrying a fund balance?
No fund balance.
So your fund balances are
Zero.
except for the timing difference
That's
between
it.
the audit, when you get the.
Yes.
And the 9 months
Right.
subsequent.
Yes, that's correct.
So you don't carry anything other than just strictly the cash?
That's it.
So whatever you're billing out, that fee you're billing out is equal to last year's
Expenses.
total expenditures?
That's it. There is no fund balance.
Okay, so any
Okay.
other questions about what George just presented? Because then I'd like to go into his other handout that he gave.
Okay.
Then we can go from questions.
All right. The second handout, just kind of really kind of went into it already. It's really telling you about the pool method. And if you look on the second page, it tells you about interest earnings and how they're allocated, average cash balance for the school districts during the allocated period. Expenses in the second paragraph. Expenses are allocated proportionally based on a school district's revenue versus the total revenues received by all school districts. So, we got kind of into it earlier, but
Okay, but it's strictly, again, going back, it's strictly the operational revenues,
total revenues.
total revenues. So
Yes.
again, I'm gonna go back to my question. When we levy for debt,
Debt is not included.
okay, so everything except debt service
That's
levy,
correct.
the special debt.
Right, right.
If we issue working capital bond, working cash bonds, are those included as?
No, it's not revenue. That's a bond. It's not
Yeah.
revenue. So what I also did, I mean, and that kind of really basically explains the interest earnings allocation and the operating revenues. And then what I did is, if you look about 3 pages in, I pulled a footnote because I thought this was probably what you're most interested in. Cash and investments, which is our footnote. Again, like I'm saying to you, we get audited every year by Evans, Marshall, and Peet. So an independent, third-party, certified public accounting firm does the audit. When we're looking at cash and investments, I looked at your audit a little bit. We go into a couple of risks here that really your policy doesn't even go into. First one is, when anytime you look at cash and investment on a footnote, you're going to see three major criteria. You're going to see the interest rate risk, you're going to see the credit risk, and you're going to see custodial risk. Those are the three risks associated with cash and investments. When I say we, the township and our investment policy, we have an interest rate risk limitation. And basically what this is that we're adopting a goal of limiting the weighted average maturity of investments 90 days to 3 years. The reason why we do that is because as their interest rates are changing, we don't want to be holding a lot of long-term bonds, like what's happening in this rate right now, moving on us. So we try to keep our weighted average on all of our investments beneath the 3-year period. I think your policy doesn't even speak to interest rate risk, if I remember right. Ours does.
Do you have to look at that weighted average period based on the fund balances that the pooled districts are carrying? Because, for example, we were down maybe to a 3-month time frame at one point. Now we build it back up. But what happens if all your districts have a very short time frame, right? That means the cash you're covering is their monies, right?
Yes.
Which could be expended in 3 months, and you potentially, what happens if all the districts, now luckily we're getting the cash up ahead of time,
Sure.
right?
Sure.
But what happens if all of a sudden November comes and all the districts were running at a 3-month window and all the cash was used up? I know it's probably theoretically not possible, right? But are you holding tax receipts in? As soon as you get a tax receipt in, you're recognizing it to the districts, correct?
Yes, immediately.
Okay, so there must be some districts out there that must have some nice fund balances that you can say 3 years because you'll know that you're never gonna use up all the cash.
What I'm looking at right now is when I look at all these audited, and I have a very large spreadsheet, I have each one of the district's funds and fund balances, and then I have the cumulative. So when I'm looking at that, and I'm looking at $215 million in fund balance, for instance, I'll say, I'll take 25% of that fund balance and I'll go long-term. Because theoretically, you want to at least hold 25% of your fund balance. Most people want 25% of their operating expenses in fund reserve. It's kind of a rule of thumb for good fiscal management. So I'll only put 25% out there in agencies, for instance, with a little longer maturity so you can get a little better interest rate, but I don't get into the cash crunch that you're alluding to. That's part of the interest rate risk also. So by staying shorter term, you don't have your money out there 10 years, and if you need the money, you got it.
So George, let me ask you a question. Was it 2 years ago, Mike, or 3 years ago, when the tax bills weren't gonna come in till like in December?
Yeah.
What did you
Working
pull
cash
anything?
bonds.
So it was working cash bonds for the school districts, but you don't have any funding that helps?
No.
Okay.
No. Working cash bonds and tax anticipation warrants.
Okay.
That was what was being sold. Now, fortunately, because the tax bills are coming out earlier, last year we didn't sell one tax anticipation warrant. Not one. And I think we had one working cash sale. That's pretty good.
Now,
The year before, there were multiple.
do you ever use some of the funds, have you ever thought about using some of the funds to fund tax anticipation warrants for
Other districts.
districts either in this proviso or outside of proviso
I
to
asked
generate
legal
interest?
counsel to look at that.
What?
I asked legal counsel to look at that one time, and I really never got a really clear, definitive, yes, that's permissible. So we err on the side of conservative, no, we didn't do it.
Okay.
But it's a good question, because because what I was seeing is some of the districts were selling tax anticipation warrants at, I thought, very high interest rates. And it was only going to be 3 to 4 months. And I thought, just like you, man, I thought, well, gee, if I have some money here and I can loan it to the district, keep the money within the communities, and make better than I can get on a CD or an agency, well, this makes a lot of sense. But I never really got a definitive answer from the council, so we didn't do it. We backed off.
25% of fund balance, at what point in time is that? Is that an average fund balance, or?
That's really at June 30th. I don't do it kind of out. But when you take 25% of the 100% of the fund balance, I think you're being pretty conservative. I mean, other people have even gone higher, but in this environment, with the way the state's paying and what, I don't think that's a good idea.
And when you pull this, you don't go and earmark a particular district which may have a 3-year fund balance, and so therefore they can go out there and borrow a 3-year time frame and get versus a district who's living on a 6-month window and have to be really short-term investment, which is earning nothing. You just weigh them all together.
Yes, that's correct.
So like a district a couple years ago, like Riverside, may have been penalized versus.
They could have been penalized slightly under that scenario, yes, that's true. That's true. That's true. The second information is credit risk. This is really outlines the instruments. This is under the Public Investment Funds Act. This is very similar to yours. It's verbatim. People lift it right out of the statute. The third one is the custodial risk, which is the kind of interesting one. This is what you're saying about how secure is the money with the people that you're investing with. And if you look here, there's $214 million at June 30th that's out in investments or cash. You got $91 million that's insured. You've got $60 million in collateral held in the township's name. You've got $55 million in collateral that's in the agent's name for our credit. And then there's an uninsured and uncollateral amount of $6.9 million. Well, let me just give you a little clarification of that number. One district has about $6,950,100 of that money. They sold some debt certificates and put it with an underwriter on their request. And as you can see, it was uninsured and uncollateralized. And we told them that do you realize that you're putting that money out there? And they said, yes, but we're going to spend it in 3 months. And they did. They spent the whole $6.9 million in 3 months on a project. But what I'm saying to you is that if you deduct that one district's capital projects fund out of here, there was only $158 that was uncollateralized or uninsured on $214 million. So what I'm saying to you is that the funds that we put out there, we make sure they're either insured or collateralized.
In a case like that, then, does that went tagged so the other districts aren't taking the risk on it?
That money was restricted
Okay.
in a separate account with an agreement. Absolutely.
The other thing is if you look at the numbers you have on the fair value, and you say, collateralized, held by banks, agents, not name of government. Now, certificate of deposits, you have $88 million. You mean to say that the treasurer goes out and buys them in $250,000 increments?
We have the ability, 14 districts. Right now, you have FDI insurance under each federal ID number up to $250,000.
Okay.
When we go ahead and buy a certificate of deposit, I put it under the 14 federal ID numbers.
Okay.
We're covered to $3.5 million
Per CD.
per CD.
So if you put them in 20 banks or whatever, you are
We're
insured.
covered.
Okay.
Exactly. Did I answer your question, Mike? I mean, we're here, so I don't know if I answered your question.
Yeah.
Okay. So I think you can be pretty well rest assured that we're operating very conservatively. And, I know that like last year, we had a return on investment of 0.62%, which to me is abominable. But in this market and under the rules and policies that we have, we're not a hedge fund. This is taxpayers' money. Safety, at our office, safety first, then liquidity, then return. It's just that simple. And in this last 5 years, I think safety's become paramount. I've been only with the township for 4 years, but I can tell you in the 4 years that I've been there, not one bank that we've invested money in that I had to get money from the FDIC back. And I'll just let you, and I just gave you a few other little things in back. We deal with a couple brokers, First Tennessee and Prudent Man Analysis. I think you might know PMA. They're very well known here in the state.
We use them.
We use them. There's what they call an IDC rating. PMA has a rating. We only let them invest in the top 2 tiers. You can read this whenever you want. They have a tier structure. They have an independent third party that reviews all the banks before they leave them, offer them to us. So not only are we FDI insured up to the 3.5, we're also having an independent third party look at the banks that we're investing in to make sure that they have good ratings and their bank statements are in good shape. So I think with these safeguards built in, that's the reason why in the last 4 years, we have never had to go to the FDIC and say, the bank failed, we'd like to have our money back. We haven't done it. So I think the system that these 2 companies are using and their ratings and their analytics are pretty darn good. Because this last 5 years would be quite a test, because you know about the number of banks that have failed. So I guess the last thing I did, kind of a quote, Will Rogers, I am more concerned about return of my money than return on my money. Still holds true. So, any other questions?
George?
Yeah.
This system came around in 1819.
Yes.
There's been a lot of consolidations of various kinds of township and other systems across the country.
Yes.
I know where we live. I know the political system. But
Cook
has there
County.
been any talk about consolidating these even further?
We're one of the bigger townships with 14 entities reporting into us and working with us.
Well, I'm talking about consolidating the townships.
I'm sure there's been some discussion, but I'm not a party to that.
I'm not trying to
At a
work you
different
out of
level.
a job, George, but I'm just wondering.
No, and you know what, I mean, there is a lot of value when you come back in and you take it from a decentralized and you consolidate a lot of entries. I mean, we have one surety bond for $20 million, okay? If all the districts did the investing, they'd each have to get an surety bond. I mean, there's a lot of repetitive stuff.
Oh, I like consolidation.
Oh, okay.
I'm talking about doing more of it.
You're thinking more.
Yes.
I'm sure there's been some discussion, I'm sure, because there are some townships that only have 3 and 4 entities. So, I'm sure that's gone on somewhere.
So given the fact that all these school districts are part of this funding, does that also include on the Proviso Township any other entities besides the schools, or just schools only?
Just these only.
Okay, and then do you ever watchdog and see something that's, I know it's, okay, you made your point about the source document is the one that's gonna tell me what's going on. But as you're seeing funds coming in and stuff like that, are you also kind of like a police officer saying, hey, you can't do what you're doing? Do you watch that out too or
There's,
not?
sometimes we get called, and that's part of the financial consultant. Sometimes we get called and someone says, I want to move money from this fund to this fund. And we tell them, I think you better check with your counselor. I don't think that's permissible. I mean, so hopefully before they went ahead and do a transfer like that, they would call us. Some do. Most of them run it through their attorney. When it comes to a resolution, when they're moving funds, interest, or they're abolishing a fund, they will have their attorneys drafted up. Hopefully they've done their homework and looked at the statute before they submit it to the board for approval. But we sometimes get a call and, somebody will just say, I'm thinking about doing this, and we'll say, no, that's not allowable. Check with your attorney, but our position is it's not allowable. We'll
So
help if we can.
when we do our audit, as all the other schools do the audits, do they turn a copy into you too?
Yes,
Okay.
yes.
Now, Tim, there's been some question in regards to the audit that sometimes the timing that takes longer for us is because we are tied to the treasurer's office and that they have to wait for some of that stuff from the treasurer's office. Is that accurate, or?
Month-end reports.
No, I think that, have they been out to your office already?
The auditors have already been, we're usually done way before any district is done.
See, and they get a lot
They're
of the.
gone already, out
They
of
get a
our
lot of the
office.
information for our audit from the treasurer's office. So our auditors are scheduled to be here next week.
Your cash and investments are lifted right off of our audit report.
Which is that the board's had a concern in the past about requesting the extension from the auditor and not being complete in October and carrying on until November or early December. which is somewhat common,
Yeah,
but the actual due date for the AFR, I believe, is the end of October.
yes.
Yeah, and I think that kind of thing has more to do with the amount of districts that an auditor
Okay.
takes on as clients,
Yeah,
and the amount of work that they have to do.
Evans, Marshall, and Pete do probably about half of our entities right now.
Okay.
So, yeah, I'm sure they could get a scheduling problem on occasion.
Any other questions for George?
You have $78 million in 4 state funds.
Mhm.
And as we all know, the credit rating of the state's could possibly go to junk bond status. So are we at risk, the
No,
people that are putting
no.
in money here? Why
No,
not?
because all of that money is collateralized.
By what? The state saying they're going to?
No. Treasury bills and other form, no. They're state agencies, but they're not, the guarantor is not the state.
Oh, okay.
We have collateral behind it, treasury bills and things of this nature.
Okay.
No, Tim. No.
Thank you.
Any other questions
Well-
for George?
Yeah, one question. You know, we have some operating cash in a local bank, all right? Do you inform the districts that, you know, you've got CDs invested in Bank X up to the FDIC threshold under our name, under our district ID? Because then potentially we do have some exposure there, don't we, if we have some operating cash at that same bank?
I have a list of where all of your bank accounts are at.
And
In
you
all the
know them?
district, we will not put any CDs in any of those banks.
Okay.
No, I have that list, so we won't go over the FDIC. So if you wanted to go to Bank X for your special accounts receivable, I say, fine. What bank would you like to go to? We don't choose that bank. You people do. But yes, we have the list.
Okay.
So we don't get an overlap.
Mike, did you have a question?
Would be just a couple confirming statements, like someone would call up and say, we'd like to move $2 million from our capital projects fund into our operating education fund.
Board
That-
resolution.
That would be one of those you'd send to the attorney, right?
And we wouldn't do it without a board resolution.
Yeah.
I mean, if Tim send over an information, I want to move money from the working cash fund to the ed fund, in writing, with Tim's name, we wouldn't accept it. It has to be a board resolution,
I'm talking about
approved by your
one of those
board.
Where you can't take capital money into operating or that type of thing.
Yeah. I mean, that's why hopefully when they think of sometimes of doing that, if there's any doubt, we ask them, please call. But we're assuming they've already talked to counsel on that. I mean, if they don't know the statute.
Whenever we do any kind of transfers, whether it's the interest at the end of the year, or like when we did we closed out that capital projects fund and transferred that small amount of money, the $10,000 into operations. The attorneys put together the resolution. Resolution comes to you, you approve it, and then the day after you approve it, then I send it to George, and then he makes the transfer.
He sends me a copy of the minutes showing the approval. So we get the resolution and the minutes that you've approved it.
My point is more that certain people in the public want us to take our capital improvement money and put it towards our operating funds. That type of thing, which you can't do or whatever.
It's not allowable.
The other thing is, if you wanted a dump of your year, you can print out one of those really thick that give you every transaction we did for the year.
Detail account analysis, yes, we do that often for the auditors.
And, our people have the flexibility to go into the system and change budget amounts and make other changes that you really don't control or oversee. You're just holding the program, and they can go in and make the changes that they want.
But anytime anybody goes in the system and make a change like that, we can get the operator and know who made the change.
Okay, so you have password and audit trail type
We
stuff.
can follow it.
Any other questions?
Yeah, I'd like you to think about that accrual issue with the billing you do to us, because if the county for the first time in decades put the bill out in August last year, shifted we incurred additional costs versus those on a cash basis. Well, they did the same thing this year. So if that was a shift in the way the county does it, there was a one-time cost to the accrual districts and savings to the cash districts if that continues to go down that path.
Well, what I'm hoping,
Well, I didn't
what I'm
even get
what I'm
it when
hoping
you said
Tim,
it.
is that This is the second year that it's happened. So I'm hoping that the districts all pick it up, and we won't have this, so everybody's on the same
Yeah,
plane.
but again, they have to file with the state and everything to change from a cash to accrual basis. It's unlike, what, if they didn't if nobody changed, there was a one-time gain for cash and a one-time loss for accrual basis, if it continues that way, and I guess I just ask if you would look at that and see if we should get some kind of a credit this year.
There'll be a one-year impact, because the year where we got the cash and the
The
accrual
1 year.
basis, we had major overstatements. You're correct, we would get charged more, the cash basis guys would get charged less. Then we go back to the equalization, because the cash guys will have it in, and now we won't have that big bump up.
I'm saying there was a one-time
Yeah, the one time,
advantage.
until they switch to their accrual, they have the opportunity of the cash flow of that difference.
It's Gary's right, it's a one-time hit.
Well, I think we should look and see if there should be an adjustment made for that purpose.
Well, I'd have to go back and try to get all the audits done on a cash basis and look at all their tax money and have them book it in an accrual and see what happens. And I don't think the
Or the
township
opposite.
can do that. I mean, that's up to their auditors. I'm not putting out the audited statements, they are. I'm lifting the revenue right from the audit. I don't wanna go in and start adjusting audited numbers on districts. You see what I'm saying?
You could almost go into your books and see what your revenues were in DCR for each
yeah,
township,
yeah,
and allocate that way on
It's a spreadsheet assignment.
on an equal
It's
basis.
a spreadsheet assignment.
Everything that runs through you, because that's what we're paying for,
Yeah.
everything that runs through you.
True, it's true.
Any other questions for George?
I have a question.
Okay.
Yes,
These are usually good, George.
yeah.
Well, they all been good.
Page 16, where you give the fair value and the weighted average to maturity.
Okay.
Well, what's the units on this weighted average?
Pardon me?
The units, is that years? The weighted average to maturity for CDs is .143. What is that?
That's the time period. From
What's the period?
The time period from the time that you purchase it to the end, to the maturity of the CD.
Is that year? I think he's asking
Point
years.
one-
That's
one-
point
one-
one four, yes, point one four three.
Years.
Yeah,
So you're buying CDs, what is that? .1412.
Probably buying it for
Come on.
2.
Yeah, but you gotta
We
realize
have-
you got one about due, and you got one that may be 3 months old.
right.
So you gotta look at
We're
the weighted
investing in
average.
CDs anywhere
Short
from
term.
30 days to
Yeah.
9 months roughly.
Okay, so very short term.
Yeah, that's our,
Very short
well, yes,
term.
because we're doing matching. We're matching inflow and cash and payroll. I mean, just to give you kind of an idea, I mean, we're talking $10 million a month in payroll out of these 14 entities and $20 million in bills. That's $30 million in cash better come due every month, somewhere.
I guess my question is this optimized in terms of, because every time you do the transaction, there's a transaction cost. I know you're trying to match things, but can this be done in a different way where you minimize the because, every 30 days means you gotta buy a new one, right, basically?
I'm matching the inflow of cash to the outflow of cash. All right, when I'm doing, I'm looking at cash balances daily. The business managers, some do, some don't. But I'm looking at it daily, every day. I'm doing cash flows every month, and I do a cash flow for the whole year for all 14 entities. I'm not doing individual entities. So I know that every 2 weeks, I need $5 million in payroll. I need roughly $4.5 to $5 million every week in accounts payable. So when I'm looking at that, I'm saying, okay, I need to match. On the 14th.
Everything is geared towards matching that,
Exactly.
all right?
That's what I
See,
want to
because-
do, because I want the money invested.
Right, I'm
John,
just
he-
trying to see if there's.
But so August 1st, when the tax book comes, he's got all this cash coming in, but he's not spending it right away. So he's timing it so that when the bills come due, he's paying it, you know what I mean? the cash
So
comes.
John, those districts who have a lot of cash get penalized, because normally they would have been in a longer maturity investment, but because he's looking at the aggregate, he's putting more short-term. Those who have very short duration of fund balance, they get the benefit of that guy who has the, so.
To some respect, yes.
All right, any other questions for George?
So, the other,
Yeah.
so, there's federal requirements, W-2s like now, I think you gotta show the health insurance,
That is
things like
correct.
that.
That's on
So
there.
if, you have to keep versed with that,
Yes, we do.
okay? If you don't, do the districts get penalized if there's a problem with the W-2, or do you?
I think we would share the responsibility.
The IRS would
Pardon me?
The IRS.
All
would
right,
penalize
go
the
after district, correct? It's because we're the ones, it's under our ID, right?
It's under your ID, but I mean, you know, we're working with you. I mean, we would feel just as bad as you do. I mean, it's not like we're somebody else, you know.
You heard that. You feel bad, we'll bring it back if
He's
there's
feeling
a
it.
problem.
All right, any other questions for George? George, I want to thank you very
Thank
much
you
for coming
very
tonight.
much.
Thank you, George.
I'd like to ask you, maybe we do this on a yearly basis or something like that. Would that be all right? Would you,
Sure.
the board feel like that?
No
We do
problem.
that? All right, I appreciate that. Tim, let's put it in your calendar and we do
Well,
that.
you know, I know, Tim, you wanted to have this meeting, but I said, you know, maybe when the auditors present the audit,
That'd be good.
be a good time for me to come
That'd
back
be a
with
real
them.
good time. I like
We
that.
can answer the accrual question and things of this nature, what happened?
George, thanks a lot. We'll see you later on. Thank you very much.
Enjoyed it.